So I know in this market it is absolutely crazy, right? Lenders are super busy, yourself included, and agents are super busy. So we're seeing a lot of multiple offer situations in this market. So buyers getting into this market, they really need to be in the best situation possible.
YMA, Young Millionaires Association.
Welcome, everyone. It is the YMA Nation podcast. It is Real Estate Wednesday, and I am Rebecca Wallace. We are continuing our series this week with a special guest. And so I have a treat for y'all. He is going to give some great information. And this episode is brought to you by the Pyramid Group at Keller Williams. They can be contacted at 864-249-1437, or you can visit them at their website, pyramidgroup.us.com. We are getting into continuing our series on the loan process this week. I do have a bit of announcements, just a small little tidbit of announcements before we get started. First and foremost, we want to let everyone know that we are still ramping up and getting ready for our 6th annual toy giveaway brought to you by YMA Cares. YMA Cares is sponsoring this wonderful event in both Greenville and Spartanburg County. You will see it all over social media, Facebook, especially. Please follow us on Facebook for the latest information on that. If you have any questions, we are still looking for donations, sponsorships for that event. And please make sure that you bring your children out. That will be held on December the 11th in Greenville and December 12th in Spartanburg. So you'll be hearing us mention that on all of our podcast episodes with all of the detailed information. We'll have links, of course, in the bio for you guys to check out and to be able to follow what's going on and what's happening with that event. So also, if you're interested in buying a home, selling a home, please contact the Pyramid Group with Keller Williams again. And right now, though, we are going to get into, if you are interested in buying a home or even selling a home to buy another home, we have a wonderful special guest on today to tell us about the loan process and give us some inside information from a lender point of view. And that is Mr. David Veach with Movement Mortgage. And Mr. David Veach, if you want to just tell them a little bit about yourself and where all you are licensed now to, because I know you have expanded greatly since we've known each other. So just give everyone a little bit introduction about yourself.
All right. Well, thank you, Rebecca. It's an honor to be here with you. Pleasure, and I've enjoyed working with you over the years. And frankly, you have a lot to do with my success. I mean, earlier in my, early on in my mortgage career, I got connected with you and members of your team, and we were able to do business together. I'm grateful for that, and really appreciate the friendship we've had with you and Joe and the team, and certainly grateful for that. So I've been lending, for over 20 years. I started in the consumer finance and banking world, and then joined Movement Mortgage in 2017, and originally licensed in North and South Carolina. And now my team has grown, and we are licensed in 6 states. In addition to North and South, we're right. That's right.
That's awesome.
Yeah,
6 states.
That's right. So in North and South Carolina, Florida, Georgia, Virginia, and Tennessee now. So we're excited about
That is
that.
amazing. That is awesome.
Thank you.
Awesome. So,
Absolutely.
hey, all of our viewers that are, we focus a lot on the upstate of South Carolina and North Carolina. But if you are in one of those other states, you can still reach out to David for your uh, pre approval needs to help with your home buying process. David, do you want to give them your contact information on how they can reach you if they are interested in starting that process?
Sure. My cell phone number is area code 803-389-8009. I'm sorry, 8095. And my email is david.veach@movement.com. That's V as in Victor, VEACH, david.veach@movement.com. And if somebody wanted to go ahead and just get pre-qualified and apply online, they can do so at movement.com/david.veach.
Look, he's giving you guys all of the tools and resources on how to start your pre-approval process. If you have questions, he's really great at answering the phone, answering your questions, getting back to you. I know I have clients that have utilized his services and have been able to take advantage of the knowledge that he has. And getting into the knowledge that he has, I know everyone is here to get the inside information from lender perspective on some of these loans. I always get questions as an agent about, well, what type of loan should I get? Or do you know about this type of loan and that type of loan? So I would just, I guess the first thing that many people need to know or want to know is what are some baseline qualifiers to get the process started as far as where does a credit score need to be, what's a good debt to income ratio, some things like that to get the ball rolling for a regular consumer.
Okay. Well, yeah. So from a baseline, we would be looking for at least a 580 middle score. So when I say middle score, we pull all three major credit reporting agency scores. So we pull Experian, Equifax, and TransUnion. And whichever bureau has the middle score, that's what gets used for
Okay.
all borrowers. So we're looking for at least a 580 score there. And then from a debt to income standpoint, generally we like the debt to income to be no more than 50% of the gross monthly income. So the debts reporting on the credit bureau, including the proposed new payment for the house. We want those monthly payments to be no more than half of what the gross monthly income would be. So we use gross income, before taxes. So if somebody makes, $4,000 a month gross, we would not want their total of payments to be more than $2,000 per month. Now,
Oh,
there's some exceptions to that. That's conventional. Some products maybe are a little bit lower than that. Some are a little bit higher than that. But that's a kind of a general baseline.
gotcha. So that is really good. That gives you guys kind of like a starting point for if you want to start the process. Are you at least at a 580? And your debt to income ratios, about where they have to be to get the ball rolling, apply and see, what you're able to do if you meet those qualifications. So I know going down to a 580, there's sometimes some stipulations that go with that. Would you say, they would need some more to be more cash heavy in that respect if they're looking to go down to a 580? What are some smaller stipulations that they need to be prepared for? You know, a lot of people are like, well, if I want to do a USDA or 100% financing, or I want some down payment assistance, things of that nature, and they're not don't have a lot of assets, how does that impact those baseline qualifiers?
Yeah. So the 580 score, if somebody were 580, yeah, we would be looking for. I would say that would fall into the category of an FHA loan, and FHA is going to be looking for reserves. So it would be important to show as much assets, liquid assets as a borrower could, including any IRA or 401k funds. FHA is going to want to see that, even if the funds are not being used to qualify. It always helps because it would just kind of show, hey, this borrower has monies above and beyond what they need for the down payment. FHA is going to be 3.5% as a minimum there. So, and then also another thing that would sort of mitigate a 580 score would be if the debt to income ratio were lower. So maybe someone's, has a lower score, but their income is very good versus their debts. And maybe instead of, being around 50%, maybe that debt to income ratio is, gets down to 35 or 30 or 25. Those kind of things help the approval process for a borrower who would have a credit score in that range.
Gotcha. Y'all are getting some really good tips and tidbits and information right now. So we're going to keep it going.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Huh? Hold on.
For their agent to be able to win that offer for them. From the lender side, what would you say is the most competitive loan when you're in a multiple offer situation, or what have you seen that really wins that offer more often for that buyer?
Okay. Well, from a loan standpoint, it's definitely going to be conventional financing. Listing agents, like conventional offers, and when there's multiple offers, they, have the opportunity to, to be selective and looking at those offers. So conventional is always going to be win out typically, or it's going to be favorable because there's typically qualifying is a little bit easier. There's less restrictions on for loan types and also for the appraisal. But customers can be aggressive even with FHA offers, where customers willing to pledge more money up front. And Rebecca, we begin to get into your area there, your expertise as to coaching your buyers around how much money to pledge up front with the contract. And then, oftentimes I know Movement, we can close a purchase in 21 days very easily, oftentimes even less than that. So, being flexible with the closing date and having a lender that can meet that certainly can help as well. So, for example, a FHA offer that's, 21 days might be attractive over a conventional offer that's 45 days.
Gotcha.
So we have that kind of flexibility there. But having assets, having reserves, having funds to pledge towards the contract is always very, very important. And ultimately, those funds that you pledge towards the contract, when we close the loan, they get applied to towards your down payment and closing costs.
I'm really glad that you brought that up, like the amount of reserves and cash and your earnest money and things like that. That is something that even in previous episodes, so if you guys go back and you watch previous episodes with me talking to buyers and the importance of having that cash, your cash for down payment, even if you're doing a USDA loan, having the cash to close or being able to be competitive with, the assets part of it and having your reserves there is very important. So there are a lot of products that help people that don't have a lot of reserves, but some of those stipulations can be a little more trying. Isn't that correct, David?
That's right. Yeah, I mean, it can be, um, you know, and listing agents know that. So, and that's why they would tend to prefer a conventional offer because it tells a listing agent that you know more likely that loan and that borrower might have a little bit stronger credit and income for qualifying, and thus, easier, and easier to get that loan approved. But it certainly doesn't mean, an FHA borrower, with an FHA loan can't get financing and can't win those offers. And oftentimes, an FHA loan is actually better for a borrower than a conventional loan. Because of the potential interest rate and also the monthly mortgage insurance premium. On FHA, it's what we would know as PMI, private mortgage insurance. On a conventional loan, that amount that's added to the monthly payment because more than 80% is financed on a property. FHA has that MIP, mortgage insurance premium, they call it, that's added as well. Oftentimes, especially if you're getting down maybe to a sub 620, 600, 580 credit score, the monthly mortgage insurance premium on an FHA loan would actually be lower than it would be on a conventional loan if the customer could consider, conventional financing. And so would the interest rate on the FHA loan. At that
Right.
speed.
So the consumer really has, consumers out there, you really have to weigh your pros and cons of these different loans. It's great to get with a lender that will be able to walk you through those things to ultimately make that decision for you to put you in the best situation as far as your monthly mortgage payment goes, as far as your interest rate goes, your PMI, things like that. It's really important to have the lender that's going to be able to help you break those scenarios down as to what that looks like for your particular credit score, your debt to income. So, David, we've been talking a lot about conventional. I did talk about the conventional loans last week on Real Estate Wednesday. So for movement mortgage, what are your qualifiers for a conventional loan? Just if someone is wondering, and we've talked a lot about it.
Yeah. So really conventional financing can be as low as 620 credit score, and depending on the amount of the down payment. So at least 620 for a conventional loan, and a debt to income ratio not to exceed 50%. So again, as I mentioned earlier, the monthly debts that are reported on the credit bureau, in addition to the new mortgage payment and HOA, if there's any homeowner association dues on a monthly basis, those get added to that as well. And we want to make sure that the sum of those debts are not more than 50% of the customer's gross monthly income. So 50%, 620, where the down payment may be lower. On a conventional, you could do as little as 3% down, depending on if you're a first-time home buyer. First-time home buyers, Fannie Mae says a first-time home buyer is someone that has not had ownership interest in a home in the last 3 years. And if you have a joint application, only one of the parties on the application, if they are a first-time home buyer and meet that qualification, then the application could be seen as a first-time home buyer application, and therefore you could put as little as 3% down. whereas FHA is 3.5% at a minimum.
Right.
So,
Right. Gotcha.
but then where you're putting the more money you put down, maybe the lower the credit score could be to that 620. Yeah. Yeah.
Right.
But the less you put down, then, if somebody, for example, were looking at 3% down and they were, a 640 score, more than likely they would fit better in an FHA loan, especially if they were putting the minimum amount down. Because if you think about it, whether it's conventional or FHA, you're still going to have that monthly MIP on an FHA loan or PMI on a conventional loan. And on a
Right.
conventional loan with 3% down at that score, the private mortgage insurance premium on a monthly basis would be quite a bit more than it would be for an FHA loan. So I
Right.
look at it like, well, you're going to have, the monthly insurance premium or PMI either way because of the down payment. Why not take advantage of the loan that's going to give you the lowest, MIP or PMI and lowest interest rate? The interest rate on an FHA loan would be lower at that score as well. Conventional is going to expect a little bit higher, higher credit score to achieve, the lowest possible rates.
So this is very important information. And so I know David is in lender talk. We love it. Lender talk. And but basically for the consumer, what that means is all of the PMI, your interest rate, all that impacts what your end of the bottom line monthly mortgage payment is going to be. So it's very important to understand what these things are and how they affect you as the consumer on a monthly basis, because you're going to be making that mortgage payment every month. So that difference could be the difference of you buying a particular property or not buying a particular property, or going with one type of loan or not going with the other type of loan. So all of these numbers add up, are going to make a difference in what you decide to do ultimately about purchase price, and that could impact what they're pre-approved for. Correct, David?
That's correct. That's right. And I'm a visual person, and I like to look at options. I love to give customers options, and I want them to be able to see. So, oftentimes I'm showing a customer, hey, here's the conventional loan option. This is what it looks like, and here's an FHA option, for example, if we're looking at kind of both, and let them see that, from an interest rate and monthly payment standpoint. Because ultimately, I think what people really care about is their monthly payment.
Monthly payment.
That's
Exactly.
very important. And yes, rate goes into that, but there's other things as well that would go into that. In the, that monthly mortgage insurance, can definitely play a factor on the overall monthly payment.
Right.
So,
And I just want to, I know we talked about FHA and conventional a lot, and I have a lot of people ask me about USDA. So can you tell us just a little bit about what the qualifiers are for USDA and how that goes into the mix of where these loans fall?
yeah. So a great question. USDA. First of all, the property must be in a USDA eligible area. If anybody has any questions as to that, Rebecca can tell you if that property is in a USDA eligible area. Also, consumers can just look it up too. They could Google, USDA eligibility, and a map comes up. They could pop in the address, and it will tell you if it is or isn't in an eligible area. So if it is, that's great. USDA, will allow 100% financing, so there's no down payment. And one thing unique about USDA is if the appraisal comes in more than the sales price, the agreed upon sales price, then the borrower has the option to actually take the loan up to that appraised value if they want, to cover any closing costs. So I've had that a couple times where, let's say somebody offers 150,000, that's the sales price. The appraisal comes back at 152. If the borrower wants to, we can take the loan to 152. They're still buying it for 150, but they're doing a loan for 152, and the extra 2,000 goes towards closing costs. So
Gotcha.
that's an advantage. You have to have a 640
Save
score.
money, right?
Yep. You have to have a 640 score with middle score, as we talked about earlier for USDA. The debt to income requirement is a little bit lower. They want to be around 41%. So
that has an impact on buying power, right, David?
That's right. That's right. And they, the USDA is saying, hey, we're giving you a 100% financed loan with no down payment. Therefore, they're expecting a little bit lower debt to income ratio. That kind of speaks to the affordability. They're looking at, again, gross debt to income ratio of 41%. So, and that's of total of payments. That's not only, the new proposed payment, but also the debts that show up on their credit bureau. So,
and last but not least, before we go, because we love our veterans and we appreciate everything that they have done and are doing for our country. And so the VA loan, I do have questions that come in about the VA loan. Can you touch on the VA loan and, who qualifies for that, how to qualify, and some of the stipulations on that product?
absolutely. I love VA loans. I do many VA loans. My dad's a veteran, so I have definitely a soft spot in my heart for veterans. VA's terrific financing is, I think most folks know, that's 100% financing. There is no there's no down payment required. And VA actually will go. You can go as low as 580 on the credit score for VA. There is no, that monthly mortgage insurance we talked about, or like PMI. VA does not have that, which is great. So it's terrific for someone who's wants to use their VA entitlement and have minimized their out of pocket by doing 100% financing. And use the funds that they've saved towards their closing costs, so it's just a wonderful product for veterans, and sometimes folks who already have a VA loan can consider a cash out VA. VA will do a cash out VA loan up to 90% loan to value.
Nice.
So we would get the appraised value and make a loan up to 90% of that value. So we could extend that extra cash to the veteran and their family if they wanted it for debt consolidation, home improvements, whatever.
So y'all have gotten all of the good stuff. We appreciate David, all of his knowledge on the loan products, what you're able to qualify for, how you're able to qualify for it. This was only the tip of the iceberg. If you have more in-depth questions about your personal profile, everyone is different. There's no well, this is going to fit every single person that comes across the table. I deal with buyers all day, every day. And, David, again, has been in this industry for quite some time. So I'm sure he has seen it all different types of files and profiles. So if you have individualized questions, his contact information will be available, and we can give that to you again. That is David.Veach@movement.com. If you would like to email him, some people like email, or you can contact him by phone at 803-389-8095. And you can also find him at, what's the email again, David?
So my online website is movement.com/David.Veach.
All right. And there you guys have it. We appreciate you coming on. A round of applause for David for all of that information. We will continue this series next week. So you guys stay tuned. We'll go in depth with some of this information, that David has given us, and just break it down a little bit more for you. If you guys have any questions, you should also contact the Pyramid Group at Keller Williams, 864-249-1437. We'll be more than happy to answer any questions for you guys. Any final thoughts, David?
Well, Rebecca, it's my honor to be on your podcast here. Appreciate you and Joe and the whole team so much. Thanks for everything, and thanks for having me.
All right, guys, check us out for Sports Talk Friday, where we give you the latest on all of the sports news, what's going on. A lot to talk about. Football, we got basketball started, pro football. So catch us on Sports Talk Friday, and we'll see you next time.
You gotta sacrifice. You wanna move like bosses move. YMA, Young Millionaires Association. Yeah, see, that's the association.